You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Welcome to the Deep Dive. We're here to cut through all that noise, the daily flood of information, really. Our aim is to give you a focused, insightful take on, well, our complex global landscape. Today, the mission's pretty clear. We're digging into global market moves, geopolitical shifts, getting you the essential insights. We've got a full briefing here covering foreign exchange, commodities, trade talks, and geopolitics too. And what's really striking is how these things, a currency blip here, a tariff there, a conflict far away, they're all connected. They're not just isolated events. They're like threads in a bigger picture. We want to connect those dots for you.
Absolutely. And that connection is key. That's what this deep dive is all about. We're not just giving you headlines. We're asking why these shifts matter, what's driving them, and maybe what's next. So you walk away not just knowing what happened, but with a clearer view of the bigger global picture.
Okay, great. Let's unpack this. Starting with global finance, the currency markets. It felt like a day with some significant undercurrents, even if things looked calm on the surface. Take the U.S. dollar. It had an early rally, but that seemed to fizzle out pretty quickly, didn't it? Especially with everyone waiting for the JOLTS job openings report later today.
Right.
As we're talking, the dollar index is sort of drifting near its lows for the session.
Yeah.
Caught in this mix of, potential tariffs, new data coming in, and just the constant buzz of political headlines.
That's a really good point. It cuts right to how sensitive the markets are right now. The JOLTS report, that's the job openings and labor turnover survey, it's not just another number. It's a key signal about the labor market.
Which the Fed watches like a hawk.
Exactly. It feeds directly into their thinking on interest rates. Yeah. Then you add the uncertainty about tariffs, protectionism, how that affects trade, inflation, and just the general political noise. It creates this really volatile mix for the dollar. So for you, the listener, seeing how these things combine is crucial for understanding the economic outlook. It often signals what the central banks might do next or where investor sentiment is heading.
It is fascinating how fast that sentiment can turn. Okay, moving beyond the dollar, the euro. It firmed up a little after dipping earlier.
Yeah, a slight recovery.
But didn't seem to get much of a boost from those final Eurozone PMI revisions, the Purchasing Managers Index data.
Right. The reaction was pretty muted.
Which maybe suggests some underlying caution. Or perhaps the data just wasn't surprising enough.
It could be either, really. A muted reaction like that might mean investors are looking past the immediate numbers, maybe towards bigger structural issues or opportunities in the Eurozone. Or, like you said, maybe the revisions just confirmed what everyone already expected. No big surprise. But it could also hint that the market's waiting for something bigger, a clearer signal from the ECB, perhaps, or a major policy shift.
Right, waiting for a stronger catalyst. And speaking of catalysts, or maybe the lack of them, the Japanese yen.
Yeah.
Still under pressure today. There were these reports, just rumors really, about a possible early election for the LDP, the ruling party.
Yes, that definitely weighed on it.
And that political uncertainty, it pushed USDJPY up through 149 for a bit before it came back down.
It really did.
Makes you wonder, are markets reacting more strongly to political rumors than actual economic data these days?
It's a fair question. Even the rumor of an early election throws in a big dose of unpredictability. Investors start thinking, okay, potential leadership change, policy shifts. What about the Bank of Japan? All that hits the currency.
Suddenly.
Especially for Japan, with its unique monetary policy and, high debt levels. Political stability is key. So that quick market reaction just shows how vital policy continuity is for confidence. A whiff of change, and bam, assets get repriced.
Meanwhile, over in the UK, sterling had its own difficulties. It dipped briefly, didn't it? Down to a multi-week low near 1.3330.
That's right, before recovering a bit over 1.34. But yeah, it struggled.
And this is happening amid, quite a bit of concern about the UK's fiscal outlook. Plus, the government confirmed the date for the autumn budget, November 26th.
Feels like the market's just holding its breath.
That's a good way to put it. The UK's finances, especially after Brexit, have been really under the microscope.
Absolutely. Worries about borrowing, spending, the overall debt path that hits investor confidence in the pound directly.
So that autumn budget isn't just routine.
Not at all. It's a big moment. The government lays out its economic plan. Until then, uncertainty howls. Any sign of, let's say, less fiscal discipline could really hurt sterling further. It's a classic case. Government prudence, or lack thereof, gets reflected right in the currency's value. Financial stability perception.
But in quite a contrast to all that struggling, the Australian dollar seemed to be doing pretty well, holding up much better than others.
It was a standout, yeah.
And that resilience was boosted by stronger than expected GDP growth for the second quarter.
That resilience is really telling, isn't it? It shows this surprising divergence. You have many developed economies wrestling with inflation, slower growth, political issues.
Right.
But Australia's strong GDP numbers suggest, well, maybe a healthier domestic economy, maybe more dynamic. It hints that specific sectors, maybe resources, maybe consumer spending, are performing well.
Interesting.
And for the global picture, it provides a counter-narrative. Not all economies are facing the same problems. Some are finding ways to grow, maybe even attracting capital from less stable places.
Okay, so that's the currency picture, reflecting national health. Yeah. Let's pivot now to commodities, the raw materials that fuel everything. Oil, for instance. It weakened noticeably today. There were these, frankly, surprising reports that OPEC Plus might be considering another production hike at their next meeting.
Yeah, that was unexpected.
A real shift from earlier talk about steady output. And it caused WTI, West Texas Intermediate, to drop sharply before finding its feet. Brent Crude pulled back too.
That's a perfect example of how fast sentiment can flip based on supply expectations. Markets were mostly assuming steady output, maybe even cuts, from OPEC, plus that's the oil cartel and its allies.
All right.
So just the idea of a production hike signals more potential supply globally, and prices usually fall on that news. What's interesting is what it might mean behind the scenes. Maybe disagreements within the group, or maybe they see global demand holding up better than expected.
Good point.
Either way, it affects everything. Gas prices for you at the pump, costs for industry worldwide. It ripples through your daily life.
But while oil softened, gold just keeps going, doesn't it? Still showing that upward bias. It even touched fresh record highs near an incredible $3,550 an ounce.
Remarkable resilience.
And it wasn't just gold. Base metals were firmer too. Copper, Dr. Copper broke above $10,000 per ton.
Yeah.
That seems to suggest steadier industrial demand sentiment.
Gold's strength hitting new records. It feels like more than just the usual flight to safety. It could be signaling persistent worries about long-term inflation, or maybe even central banks quietly diversifying away from the dollar, hedging their bets. We've seen hints of that trend accelerating.
Interesting. And copper.
Copper breaking $10,000, that's significant. It suggests that underneath some of the wider global worries, there's real, tangible manufacturing and construction activity picking up. Or at least holding steady.
So specific economic resilience.
Exactly. Certain industrial sectors seem to have demand, despite everything else. It's a powerful, almost contradictory signal coming from commodities right now.
Really fascinating to see those different forces at play. And these economic shifts, they don't happen in isolation, do they? They often really impact how countries deal with each other on trade. So let's move to that complex world of global trade relations. We heard that Japanese negotiator Hiroshi Akazawa is heading to Washington between September 4th and 6th to keep talking with his U.S. counterparts.
And that just highlights the continuous, often quiet work of bilateral trade talks. These discussions might not always grab headlines, but they are fundamental. They shape economic policy, maintain diplomatic channels. It's where they hammer out the details, market access, regulations, specific industry issues. These behind-the-scenes talks are vital for sorting out disputes and setting the stage for future trade. Diplomacy often works best out of the spotlight.
Meanwhile, President Trump confirmed his administration is taking the tariff fight to the Supreme Court.
Right, appealing that recent ruling that found many of his tariffs unlawful.
That sets up quite a showdown, legally and economically.
It really does. And the implications for the future of protectionism and even the rule of law in trade are huge. If the Supreme Court were to side with the administration, it could really strengthen the executive's power to impose tariffs, perhaps with fewer checks.
Which could mean
more trade disputes, potentially, and definitely prolonged uncertainty for global supply chains. Businesses would constantly have to adjust. It's a move that could reshape trade policy for years. Global companies would have to rethink everything.
And shifting across the Atlantic, Europe seems to be taking a different tack. European Council President Antonio Costa stressed diplomacy over escalation with the U.S.
Yes, he noted it would be too risky to inflame tensions right now, especially with Europe facing security threats on its eastern border.
That's a very clear strategic calculation, isn't it?
Absolutely. You see trade policy directly linked to broader security worries. Europe needs that unified front, especially regarding Ukraine and potential Russian actions. So choosing diplomacy with the U.S. on trade, even if there are disagreements, reflects a pragmatic choice to keep vital alliances strong when facing bigger threats nearby.
Balancing multiple fronts.
Exactly. Economic policy as a tool for strategic stability.
And finally, on the trade front, India confirmed it's talking with Washington about a potential bilateral trade agreement.
Which just underscores how diverse and multipolar the global trade landscape is becoming. While some countries are navigating disputes, others are actively building new partnerships. India and the U.S. exploring a deal shows that strategic alignment, a desire to boost economic ties outside the traditional major blocs, it signals a really dynamic, shifting picture in global commerce.
Okay, from trade diplomacy and disputes, let's dive into the often turbulent intersection of economics and power. Geopolitics. Ukraine, sadly, faced more widespread Russian air and drone attacks overnight. Air raid alerts across the country, and Polish aircraft even had to scramble.
Yeah, a grim reminder of the ongoing conflict and its immediate regional spillover. Polish jets scrambling Poland, being a NATO member, really highlights those broader European security stakes. It's not contained, it demands constant vigilance from neighbors, it shapes defense budgets, energy plans, diplomacy across the continent.
And the disruption ripples far beyond Ukraine.
Absolutely.
Yeah.
Psychologically, economically.
We also heard from Moscow's foreign minister, Sergei Lavrov. He said talks with Kyiv are ongoing, but, and this is key, he stressed that lasting peace requires recognizing territorial realities. A very deliberate phrase. And importantly, he specifically praised India for not bowing to U.S. pressure on buying Russian energy, noting Moscow appreciated it.
If we connect the dots here, Lavrov's comments show several layers. The territorial realities bit is Moscow signaling its demands regarding occupied land are non-negotiable.
Right.
But singling out India's stance on energy is really significant. It highlights how major powers like India are charting their own course, prioritizing national interests like energy security over external pressure.
And Moscow values that.
Exactly. It shows a shift in global power dynamics. The old Cold War lines aren't holding. These independent stances matter.
Turning to the Middle East, always a complex region, reports suggest Israeli officials are debating whether to impose full control over the West Bank.
A potentially huge development.
At the same time, more explosions reported in Gaza, just underscoring the ongoing tensions. And meanwhile, Iran's foreign ministry stated they haven't decided yet whether to continue talks with the IAEA, the nuclear watchdog.
Taken together, these paint a picture of just how volatile and interconnected the region is. The West Bank debate has massive implications for Palestinians, for regional stability. The Gaza violence points to that deep, seemingly endless cycle of conflict.
And the Iran nuclear question
Has global consequences for non-proliferation and the regional power balance. These aren't separate issues. They influence each other, creating this constant state of flux. It makes predicting stability incredibly hard and demands constant diplomatic effort.
And finally, there was that very high-profile military parade in Beijing, attended by President Xi, Russia's Vladimir Putin, and North Korea's Kim Jong-un.
Quite a gathering, highly symbolic.
She declared China is a great nation that fears no violence and called on countries to prevent historical tragedies recurring.
A strong statement of intent and perspective.
And then, almost immediately, President Trump reacted on social media, didn't he? Accusing Xi, Putin, and Kim of conspiring against the U.S.
Right. And this whole sequence really puts global power dynamics on public display. The parade itself projects this image of unity, a specific geopolitical alignment. Xi's words offer their worldview, their ambition to reshape things.
That's Trump's reaction.
Provides the immediate counter-narrative. It shows how starkly these power plays are perceived and framed differently. It's a very public illustration of the current global fault lines, really setting the stage for future confrontations, both in words and actions.
Wow. What a sweep across the globe today. Thinking back on everything we've just discussed, it's just so clear how interconnected everything is, from tiny currency moves driven by a jobs report to, well, major geopolitical statements at a military parade. It's all woven together. Hopefully this deep dive is giving you that curated view, cutting through the noise and connecting those crucial dots for you.
Indeed. It's never just isolated events, is it? It's always these threads in a bigger, constantly shifting tapestry. And understanding it means thinking critically, seeing how one thing links to another, getting past the headlines to the forces underneath, and also maybe questioning how the information itself is presented to you.
That's a great point. Okay, so something for you to think about as you go. In this world where global forces are always reshaping things, and we see both tension and surprising resilience, what single shift, maybe economic, maybe tech, maybe geopolitical, do you think might have the most unexpected ripple effect in the next few months? And why? Something to mull over. We definitely encourage you to continue your own deep dive. Until next time, stay curious.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.